That is funny. Very funny, Gold SD. Okay, great. Yeah, go ahead. So, yeah, we'll email them and then we'll go from there. I apologize if I'm frustrated. There's only so much I can do. Anyways, well, let's go ahead and begin with trading. I want to put up the charts. And to answer, yes, exactly. Tracy says, "Hey guys, some stuff is personal." Yeah, I appreciate that. But the last question I will answer, Boyke, no mortgage, just cash. It's all cash. So, anyways, with that being said, I just put up a new chart. Do you guys see the new chart there? Yes, no? Did my sound go? Oh, okay. Fantastic. Okay. So, if you remember, for those of you at last week's class, there was a request at the end which was, "Hey Chris, would you next week show a trading mistake so we can learn from that?" Because the format we've been doing so far is, showing trades that, okay, this is how I picked it out. This is how I was using price action. This is how, what I was going through from a price action perspective. This is my entry exit, all using price action. And the whole point of that is to show you, the same things that I'm doing, to show you, to take you through it, walk you through it step by step. And with that being said, by taking you through the steps that I'm doing on an everyday basis to make trades every single week, it's designed to show you how you can trade using pure price action, how I trade using pure price action, what thinking process I went through, what analytics, or how I looked at it from a pure price action perspective. And that if you do that enough times, eventually you'll start to see the same things in the charts, in the trades. You'll start to find these opportunities yourself. And so, with that being said, I forget who it was. I'm trying to remember. I think it was a regular student, but they said, "Hey, we'd like to see a mistake, somewhere where you made an error." And so, I don't know if it was subconsciously or whatever, but today I would almost call it 2 to 3 mistakes. It was really 2 trades, but I would call it several mistakes batched into 2 trades. And so it was kind of fitting that today is the day of that, and today is the day that it happened. I had only one last week that I would call kind of a mistake, but it was an odd one, and I thought it would have been very weird to teach about it, because I don't think it would have been fully satiating. But this one, I think, will be very satiating on all fronts. And so, first off, we're going to approach it from a pure price action perspective. We're going to kind of do some of the same things in the sense of, hey, this is what I was looking at from a price action perspective. This was my price action analysis. This was where I put my stop, entry, exit, the whole thing. These are how I made my decisions, all from a pure price action perspective. And then here's what went wrong. And here's the mistakes that I made in that process. And so, it's actually, it was actually kind of, I was almost tempted to tell Maud and Adinda, "Hey, please don't record today, because this recording is going to be there forever of all these mistakes that I made." But at the same time, I think it's very good to be honest with oneself that, mistakes are a part of trading. And, I actually don't mind these being recorded, because I think this will be a good learning experience for both, myself, but also for you to see, hey, successful traders are not perfect. And anyone that tells you they are is just lying to you, flat out. Successful traders make mistakes. Some of them are more accurate than others. Some of them are less accurate. But sometimes the ones that are more accurate, maybe they have, lesser risk to reward ratios. So their profitability is maybe the same as the next person. Or maybe the person that's less accurate has very high reward to risk ratios. So maybe they're not that accurate, but maybe they still make a lot of money. And so there's various types of successful traders. Successful trading doesn't just mean, you hit above a certain level of accuracy and you're profitable. It just doesn't work out like that. And so with that being said, there are various types of that. And, I'm actually very happy and excited for this opportunity to teach this class. And it's also been good for me because since I had to teach about it, I also had to spend a lot of time really thinking about it, and really figuring out ways that I could communicate all the subtleties of it so that it would be information that would be useful for you. And so with that being said, let's go ahead and begin. Before we do, start in this, if there's anybody that is here for your first time, welcome to the class. It's good to have you here. Thank you for coming. If it is your first time, let me know, just so I know, where we're at with, people that are their first time. And for those of you that have been here before and keep coming back, it's always good that you keep coming back. Keep practicing, keep coming back to classes. In time, you'll get it. I can't say when, I can't say how long. Some of you shorter, some of you longer. But if you do keep coming back and you do keep making improvements and do keep moving in the right direction, you will get there. No doubt about it. So with that being said, keep coming back to these classes. You'll see the continued improvement over time. So with that being said, fantastic. Brian's first time, Fancy Kid first time. Sebastian, Lisa, hello to you as well. Good to see you. So let's go ahead and begin with this trade here. Okay. So I had actually written about in my blog post a while back about how I thought dollar Singapore was changing its structure tremendously and how this could prevent a pretty good trading opportunity. Dollar Singapore since June of last year has been below the 20 MA. Several weekly rejections off of it, 3 here, 5 here, 1 here, pretty close one here. But then this one was completely unique. Completely unique. Not just that it closed above it, but, this candle, look at all the other touches. They all had some sort of, decent rejection off of it, and this one just diced right through the 20 MA. Very unique situation. And I even wrote about this saying, hey, this will probably lead to more upside gains. I even talked about the very beginning of the week when it started off right here, and that was, several hundred pips back. And so, as a trader, I'm always looking for unique opportunities, especially from a price action perspective, and this definitely qualified as unique on various levels. So I started to look at that, but by the time I actually was really tuning into this, it was already starting, to kind of go off and running. And so with that being said, I said, okay, well, where would I want to get into this thing? Let's take a look at it. How would I want to get into this thing? And I looked at a couple options. I started pulling fibs. And I said, yeah, there's a couple fibs here that match up really nicely. This matches up really nicely from the 2010 high to 2011 low. It's a nice swing. The first fib matches up really nice with price action over here. The second one is decent. Third one's okay, but the first one is the one that matches up best. So I said, that's not bad. Then I started to look at from this point right here and noticed there was some decent fibs there. And so I started to play with it a little bit and just started to kind of look around and see, what was out there. And, then I did one more fib and I pulled this one up and I said, oh, that's not bad. That one works as well. So there's several here that work. I said, okay, well, there's the 2011 high to low, and that's that fib. And I said, well, it actually kind of matches up nicely. This one matches up decent with price action here, and this one matches up really good with the round number. And I said, okay, the fibs are okay. They're not matching up perfectly, but they're matching up okay. None of them really is that much better than the other. So I said, okay, let's just start to watch it. And so I went back down to my 4-hour time frame. And most of my trading is done on the 4-hour and daily time frame, especially on price action. And as you can see, it really started to wind up here. It started to break out of that range, and it just kind of went for a fantastic run. Then it ran into 125 and had a pretty strong rejection off of it. It hit 125, but it wasn't impulsive by any means. It just had a decent rejection. In fact, take a look at this candle, lots of buying, runs into 125, and we have 1, 2, 3, 4, 5, 6, 7 candles, 8, 9, 10, 10 candles before we actually touch the low of this one candle here. So this kind of meager sell-off with the candles getting smaller and smaller and the blue candle still staying strong, we're all communicating to me, hey, still a buying opportunity in this. By the way, is sound still going? Because Solomon said the mice off. And so I think he was trying to say, is the mic off? Can you all still hear me? Yes, no? Okay, fantastic. Yes? Okay, great. Fantastic. If the mic goes out on your end, try logging out and log back in. If it does go out for all of you, everybody will be typing in pretty quickly. But if the mic goes out for you and nobody starts typing in anything, chances are everybody still has sound, it's just you, and you need to re-log back in. So anyways, I start looking at this. I start looking at the rejection, and the selling candles were just kind of timid in nature, and it seemed like, okay, this area seems to be holding. To me, it doesn't seem like there's anything special about it. But I would rather wait for a breakout than actually wait for or try and trade off the bottom. And so I said, okay, let's do that. So I said, well, wait a minute. The high here was 25.07. And so I'm going to place my trade at 25.15. Now, many of you are looking at the chart saying, how is this a mistake? Well, we're going to get to that in just a second. So I bought at 25.15 because I like the breakout on this one here. And this wasn't one that I really felt like it needed to be a breakout retest because 125 hadn't showed up historically to be a major resistance before. The only time I like to use the breakout retest, or the times that I most like to use the breakout retest trade, is when we're bumping up against a major historical support or resistance. Something that live money has been put into the market before, created a support or resistance level, and therefore sometimes I want to see if the market will no longer treat that as resistance but will treat it as support. We really didn't have that with 125. It had no other major historical significance all of 2011. So with that being said, I didn't feel like breakout retest was appropriate. I felt like breakout was more appropriate. So I got in at 25.15, and I had, going back to the daily time frame, let me zoom out just a little bit. I'll show you where I had my final target, which was right there. I was a little concerned about this one here, and I was definitely a little concerned about this one here. But I really felt like, okay, if this is going to make a massive run, I should be able to get to 27.77. And maybe I can use these as profit taking. So I looked at them and said, well, wait a minute. I'm in at 25.15. Where am I going to take profit? And the first one I chose was actually 26.47. I decided to skip 26.98 to go for the next one out, 27.77. So I said, this will be my profit my first profit taking. After that, I'll take some profit off the board, move the stop to break even, and then I'll go from there. Now, this is where the mistake comes in. There's the 26.47, right? 27.77 is my final target. My entry is at 25.15, which is a breakout here of this prior high that you see over here. Here's where the mistake came in. And this is where things started to unbuckle themselves a little bit, and I really started to look back and say, wow, what did you just do? I'm long at 25.15. Price kind of floats up to one of these prior resistance levels that I had noted before, and this was my first profit target. And so I took some profit off the board at 26.47, brought the stop to break even, and felt like, okay, I've made some profit. Fantastic. I'm still holding for my 27.77 target. Well, somehow I came up with the bright idea, and this is where the mistake came in, that if 26.47 is a pretty significant resistance level, and we're seeing this in the chart, it was rejecting off of it, and here's where I was when I made the decision. So let me show you what the chart looked like for me when I made the decision. I said, well, you traded a breakout before this that worked out really well. Why not go for a second breakout? If 26.47 is really going to hold it, Well, then let's trade a breakout just above it. And so I said, fantastic. I did that. Now, first off, I had completely forgotten. Here's mistake number one. I had completely forgotten the whole point of taking the breakout retest trade. I took a breakout on this one because it wasn't a major historical support or resistance. Therefore, because money had not in the past treated it as a significant level, I felt like if it's going to break out, it's just going to break out. But if it's a key support or resistance level in the past, and has been, especially on the daily time frame, then I would generally rather wait to see a breakout retest to where it breaks above it and then sits above it, no longer treats it as resistance, and now treats it as support. Why? Because that's money communicating in real time, saying, hey, guess what? We used to consider this resistance. We're now considering it support. The funny thing is, I had just been thinking about that when I had set up the prior trade, but I completely forgot about it on this trade, and I was stuck in the mentality of, hey, well, the breakout worked before, it's going to break out again, so this trade will work. So I bought it again. I put an order at 26.60. Well, guess what happened when I went to bed? The market did break out like I suspected, but then it got slammed back down. So first off, I was completely ignoring my general rules for taking a breakout retest trade. That was the first mistake. And that may seem like a slight mistake, but it actually gets worse. The second mistake was this. After seeing, take a look at this candle. Let's analyze this from a price action perspective. This candle breaks out. It opened at 26.29. So let's mark the candle. It sells off just a little bit to start off with. 26.29. It drops 29 pips right to the round number. It then climbs to 27.11 and closes 1 pip from the high. Generally, that means increased buying pressure all the way into the close. And so there was consistent buying pressure all the way into the close. Well, that usually means continuation. But instead, the market didn't do that. It behaved the complete opposite. The market then, and this is what I woke up to, I woke up to this massive candle selling off. And I said, hold on a second. You opened at 26.29. You only got 29 pips. Then you climbed 111, closed 1 pip from the top. In the next candle, you eradicate about 95% of the gains from an open to close basis. Something happened. Something happened there. That's not good. It's very rare that something climbs 111 pips all of a sudden to reverse complete course there. So I said, hold on a second, that's not good. But instead of actually listening to that, what it was communicating to me from a price action perspective, that whatever buying was involved in that before, it ran into a wall of some sort and got hammered. Think about it. This entire run-up, does any candle in this entire run-up equate to this candle? Not one. So that's something unique. And instead of paying attention to it, I kind of said, well, that's okay. I still got all the profit from this one here, and it's sitting right above here. So let's go ahead and just keep the trade. Keep in mind, I'm in at 26.60. So I completely ignored my breakout retest method, and on top of it, I really didn't give this enough credit that it should have been given. I really wasn't paying attention. Then it gets worse. The market then sells off, and when it's about here and breaks this low here of this candle, I should have said, wait a minute. This thing just broke the low of that massive buying candle. Why am I still in this trade? It's ridiculous that I'm still in this trade. My stop, 25.75. And I said to myself, you should be getting out now. This is the part where you should be getting out. It ran into a wall after a massive buying breakout. It has reversed all of that and then some. You should be getting out. Just broke the low of this candle. You should be getting out. You know what to do. You get out. And guess what? I didn't. So this trade right here, complete loss. Complete loss. 26.60 to 75. It was an 85 pip loss. It ate up a large portion of the gains that I had already booked from this trade right here. So I'd already eaten up a good portion of the gains that I had there. But then on top of it, this was the other big mistake. This was the creme de la creme. So really, it's like 3 mistakes in one. You guys asked for it, you got it. So just happened to have good timing. When this candle closed, instead of following my set of rules for entering a trade, I didn't have a new pattern. I didn't have a new system activate. I didn't have a new anything telling me, hey, there's a trade here. I completely went off the reservation and said, well, I still believe dollar Singapore is going to stay long, so you know what, I'm going to rebuy it at 2600. Meanwhile, my other trade at 2660 is in the negative. I put in another trade at 2600 with the same stop as this one. The market keeps selling off, and I don't even bother to say to myself, wait a minute, that was a bad idea. First off, you completely violated your rule, which is you only enter a trade if you have a price action trigger or one of your systems activate. I didn't have any. I just completely made up 2600 as an arbitrary level and just said, well, I was still married to the belief that dollar Singapore is going to continue to climb and I want to take advantage of it. So I just bought at some arbitrary level without any price action trigger or signal. On top of it, I had a contrarian signal to boot. So 3 mistakes resulted in 2 losses, and the 2 losses resulted within 15 hours. So those were the mistakes that I made. The original trade was very well done, and it was based upon sound principles. It was based upon my trading plan. It was based upon all my rules of engagement. It was done according to execution. But the second trade, that's where the wheels started to come off the hinges there. That wasn't done according to my trading plan. So that was really the biggest mistake, that once I left my trading plan at that point, I was really freewheeling it. And so with that being said, that was a big mistake. Then on top of it, not paying attention to what the price action was communicating in real time. And then on top of it, adding on a position without having any trading signal whatsoever. And so after this candle closed, I think this broker said 25.78, but my broker actually tagged my trade. So both of these ended up losses. I pretty much ate up all of the gains from the prior trade. So from this buy at 25.15, all of the gains are pretty much eaten up. I maybe ended up like net 20 or net 30. So I just completely wasted, in 15 hours, I completely wasted all the effort of a really good trade. Now with that being said, does everybody see the mistakes that I made, and does everybody see how bad those mistakes were in the sense of how critical those mistakes were? Does everybody see the flaws in them? Yes? Okay, fantastic. Now, this is where I really have some comments. You know, this is where the learning experience really comes in. So, and I spent some time really writing down the mistakes and what I learned from this whole experience. One, let's see. First off, the most critical one was deviating from my plan. This is one of the worst things that you can do, is that once you deviate from your plan, it's very easy to continue to stay off the reservation. However, when you're sticking with your plan, it's very easy, and you're doing it time and trade after trade after trade after trade, it's much easier to stay in that rhythm. But once you go off, it's much easier to see several mistakes. That's why if you look at professional basketball players, when they get on a hot streak, they're hot, but when they go cold, it's not just one shot, it's several shots in a row. And so with that being said, it's very critical, to always stay within your trading plan. Within my trading plan, if something goes wrong, then I feel pretty comfortable about it. But you actually tend to feel worse when you go off the reservation because you realize that you did something that was completely undisciplined. You violated all your rules that have led to a very successful trading career so far. So why would you do that? Why would I? It would be, it's completely counterintuitive productive. It's not the basis of a successful trader or anybody who is doing a skill-based endeavor. So with that being said, that was one of the big mistakes. The second thing was that simultaneously I had another trade that was running, and it was running according to all my rules, but it just didn't work out. It wasn't that big of a deal. It was only like a 35 or 40 pip loss. It wasn't that big a deal. It was according to all my rules. And so in and of itself, it wasn't that bad. But then when I combined it with these two trades, it now all of a sudden mounted to 3 losses in a row. And I said to myself, wait a minute, hold on a second. You rarely ever have 3 losses in a row. And I actually went through my entire 2011 trade report, and I only had a total of, I think, 4 instances. It was either 3 or 4 in all of 2011 where I had 3 losses in a row. It's just not a common thing for that to happen for me. And so with that being said, seeing the 3 losses in a row and having the 3 losses in a row, because it was such an infrequent event, I actually had a pseudo reaction to it. It wasn't a positive reaction. It was like, uh-oh, something's going wrong here. And so, my first reaction was to beat myself up because everybody has their own unique neurotic tendencies. Everybody has them, and they come out during trading. They're going to come out during trading. How well you deal with them, how well you transform them and get past them will be absolutely key and crucial to your success. First, you have to discover them and really understand them, be aware of them. Then you have to learn how to relate to them, and then you have to learn how to transform them. If you don't go through that process, you'll never become a successful trader. There will always be something psychologically that is continually unhinging your success. And you'll want to blame the market, but it's actually you. And so if I have a neurotic tendency, it's to beat myself up. And so I started to actually initially go into that. I started to be like, started to beat myself up mentally for that. And then about 30 seconds to a few minutes later, I just stopped myself in my tracks and I said, whoa, wait a minute, hold on a second. First of all, that's not going to help at all. Second of all, not to get caught up in things like this. You're a professional trader. You have a very long career. How do you deal with losses? Like you always should be dealing with losses. It's a loss. You move on. You learn from it. You find out what you did wrong. You really study that, and then you move on. And so it took me a little bit, but I had to regain my composure to actually come back and say, okay, first off, you've dealt with losses before, no big deal. This is nothing. This is absolutely nothing. Even though it may seem like a lot, it's absolutely nothing. You've made thousands of trades, thousands and thousands of trades. 3 losses is not going to mean anything. Yeah, your bank account went down a little bit. Yeah, so you didn't, get those things that you wanted, or you didn't make as much money as you wanted this month. Month's not over. But that's all neither here nor there. It doesn't matter. You've been through things like this 1,000 times before. You know what to do. So it took a while, but then the training started to kick in gear. And then after that, I had to go into start looking at all the mistakes that I had made. From the deviating from the trading plan to going off the reservation, but then also, there were other mistakes in this other than that we've talked about in this class. What were some of the other mistakes? Well, one of them was over the last week, I've been getting this, from this week and even the second half of last week, I've been getting this intuition creeping in. And this intuition has just been creeping in. It's just been saying, trade less. Trade less. And it's one of the hardest things for a trader to do. It's one of the hardest, whether you're successful or not, it's hard to pull back on the throttle. It's hard for a race car driver to not go fast. When they get in a race car, they want to drive. They want to go fast. And it's the same thing with trading. You know, you see moves, you see things happening, the market's moving, you think opportunities and money and all these things, and you say to yourself, wow, I could do that. I could make money off that. I could trade that. You know, it's a natural tendency to want to trade. But it takes a lot of discipline to, in certain moments, not trade. Especially when your experience and intuition is all communicating, trade less. And this little voice had been getting stronger and stronger and stronger. Now, why was this a mistake on my part? Because for me, not listening to my intuition is critical. Every time you silence your intuition, you know, it's kind of like, I don't have kids, but it's kind of like silencing your kid. You know, they're going to become less confident in speaking out. For some people, intuition is not that important. For other people, it's more important. It's a sliding scale. And for me, listening to my intuition, not just in trading but in life, has brought tremendous value to me. And every time I haven't listened to it, it's generally brought more difficulties or suffering or pain or, you know, consequences that I really didn't have to deal with. And so this was a big mistake. Since last week, about Tuesday or Wednesday, everything's been saying, pull back a little bit, pull back on the reins, pull back on the throttle, trade a little less, be a little more patient. Something's coming around the corner, but just sit back a little bit. And I ignored that. And instead, I actually traded more frequently than I usually do. And so that was a big mistake, was not listening to my intuition. You know, and so the things that resulted from this was I got to spend some time really looking back upon all the mistakes. I literally visualized the whole sequence of events in my mind, went through all the mistakes that I did, and then I literally made mental notes in my head, and then I re-visualized myself coming back into that situation so that the next time I do come in that situation, I had visualized myself not making those mistakes again and actually making the correct decisions. And so with that being said, you know, that was kind of the process that I went through. Now there's a couple of comments here. Let's see what the comments here. So Fernando says, yet this is still a pretty good uptrend. You know, overall, structurally, yes, but regardless of whether it's a pretty good uptrend, that doesn't mean I just arbitrarily enter the market. I wait for one of my systems or triggers to come in, and then I take a trade, not arbitrarily making trades. You know, if I had to guess, what would be one way to play it? Maybe pull back to 20 EMA, or maybe a pull back to 125, and then get back in for this trend to continue. So if the trend is still intact, fine. Trends have pullbacks. That doesn't mean I always trade every breakout that happens. Sometimes the best trades in trends are pullbacks. So that's my thoughts on that. Gam says, I have a rule that if I take a loser, I get up and walk away, go do something else for 30 minutes, then I come back and reassess. You know what, Gam? That will probably be a good rule for you in the beginning, but eventually as you learn to digest losses, you won't need to get up and walk away. Ideally, your goal would be so that you no longer need that rule, so that a loss happens and you haven't gone off the track. That would be my recommendation. So I would use that rule as an exercise, as a training exercise, but I would also still look at taking things, learning how to deal with losses in such a way so that when you do have a loser, you don't have to get up, walk away, do something else for 30 minutes, then come back and reassess. You can just deal with it in real time and be done with it in 30 seconds. So I think that's a good rule for now, but I would also look at seeing how you can get past that rule. You want to learn how to break through your own barriers. Boyke says, maybe your thoughts concentrated on new house taking focus off FX. You know, I don't think so. I really, you know, I was going through my process and I wasn't really thinking about the house. In fact, now that since you know, the owner has accepted my offer and we've already started the contract signing, I feel kind of like we're already past that at that point. I feel like a huge weight has been lifted, and, it's time to, start moving and preparing for other things. So that's my thoughts on that. Brian says, was wondering if the blue doji would have been sign prices gearing up for a change in direction. Here's the thing about doji that I think everybody gets so... I feel people are incredibly misinformed about dojis. Everybody seems to think doji means change in direction of price. Dojis do not mean just that. Dojis can mean, I can come up with a list of about 100 different price action environments or order flow environments that would create a doji, and maybe half of them will mean change in direction. Sometimes a doji will come up and mean continuation. So everybody seems to think, maybe this was the big flaw in Japanese candlesticks, but dojis don't just mean change in direction. They can often mean continuation. And so I think it's important not to get caught up in, there was a doji. And it's also important not to get caught up in thinking, there was something in the chart that would have clued me into my mistake. Sometimes there's not going to be anything in the chart to clue you into your mistake. Sometimes there will be absolutely nothing. Again, sometimes, and I've said this before, sometimes you will do everything right, everything perfectly, and still lose. Again, that's not a weakness of you or your system. That is life. That will happen in life as well. So it's important not to always, after a loss, say, there was something in the chart that should have clued me into that. If I'd only seen that, I would have avoided that. That's silly. It's completely silly to think there's always information in the market that will always point you to the true direction. Sometimes there will be nothing. So hopefully that's my thoughts on that. Patib says, getting stuck in your own head, the marriage belief is a place we've all been to our cost. Yeah, it's important for a trader to always be flexible and always have their finger on the pulse. It would be horrible if, let's say, you had, a lot of health problems and you went to your doctor, and, you have this health problem, this health problem, this health problem. But then over the next 3 years, you start to correct all of it, and then the next time you go see him, he only sees the health problems that you had. He doesn't see the improvements that you made. And so it's important to always be paying attention to things in real time because things change. And this market can change fast or it can take its time changing. And we have to be sensitive to that. So that's my thoughts on that. Dry Desert says, trade less sounds like your consciousness telling you that the unattended thinking process had taken over for a while, just my subjective interpretation. That's a possibility, Dry Desert. I would probably look at it. Generally, my intuition when it comes into these markets, it's not so much like there's an unattended thinking process. It's usually, my intuition just has, for some people, intuition is completely meaningless in the sense of, they're much more mechanical in their thinking and much more orderly or logic-based. And some people are a little bit more on intuitive. They're just a little bit more intuitive about that. And I tend to be more towards that. Although I can be incredibly mechanical, incredibly logical, incredibly Vulcan, or, objective in my thinking, my intuition is also something that is very strong inside me. And so that's something that I've had to develop, cultivate, learn to trust, listen to. And usually when my intuition is communicating that, it could be for a myriad of reasons. It could be that it's sensing something in the market. I've been doing this a long time and have amassed a lot of information. Sometimes that information will come out in the form of an intuition and not necessarily a clear pattern or formula, just a screaming feeling, don't do this or do this, And sometimes it can be other factors as well, Jesse Livermore, one of my favorite, stories and traders. In fact, if you haven't read the article on my website about him as the world's greatest trader and the lessons that I learned from him, I'll get you the article in just a second. But if you haven't read his story, and I have both his books here, reminiscence of a stock operator, but my more favorite one is World's Greatest Stock Trader. If you haven't read that, fantastic book. Fantastic book. You want to talk about intuition and really listening to, one's experiences and the sum of all of one's experiences. There are some stories in there and some little things and anecdotes in there that he shares that are just absolutely amazing. They'll just blow you away. And they led to some of his greatest trades. So there's the link to that about Jesse Livermore. Risk Wing says, do you think that the highest frequency one trade per session is a good rule? You know what? I don't think there's one rule for everybody. I think everybody's different. And, it really just depends on style. It's really, it's a question of style. I was talking to my archery teacher, and we were talking about the release. When one releases, the hand that's holding the bowstring, when it releases the arrow, the technique that we use through the follow-through after that. And ours is more based on the Korean technique. And I was watching some of the videos of, the World Cup archery competitions, and, all the different traders or all the different shooters have a different style to how they handle the release. Some is in the Korean style, some is in a much more different style, some of it's their own style. And, he was telling me, he said, look, he goes, when you have hit the elite level in our school, then you can have your own style. You can make the adjustments any way you want. Until then, you want to practice the technique as much as possible. And then once your shooting gets that consistent, then you can start to build your own style. And so, it's the same thing in trading. You want to get to a place where your trading is consistent. You're constantly hitting goals and targets. You're consistently performing month after month, year after year after year. And once that happens, then you've hit a certain level where you can develop your own style. And that may be more frequent trading, and that may be less frequent trading. So I don't necessarily think there's one rule that's good for everybody or one truth that is the monopoly of, how you should do it. I think it really depends on you, and I think that's something that you have to discover over time. So, yeah. Fantasy Kids, being new to trading, how come there was nothing place for take profit while you sleep? There were take profits. All my trades had take profits. Every single trade had take profit. Every trade I enter has a take profit, it has a stop, it has the whole thing. The ones I went to while I was asleep, I had already taken profit on the existing trade and had a final target. In terms of the 2660, it had the same target as the other one, which was the 2775 or wherever that was. So it just had the same target as the original trade that I had at 2515. So that was all in place. Maybe I forgot to mention it. My apologies. Ghana says, so Chris, as you're about to enter a trade, prior to a trade entry, there is a doji. What would you do? Dojis do not mean reversal or indecision. They oftentimes can mean trade continuation. I'll give you a little hint of what I look at when I do see a doji. What I'm most concerned with is what is the color of the candle to the left and what is the color of the candle to the right of the doji. But other than that, I'm not too concerned about dojis as a whole. So dojis, again, don't necessarily mean, don't get caught up in the traditional candlestick way of thinking about it. The price action leading up to it oftentimes can be far more superior than a doji. So hopefully I answered your question. Gam says, yeah, I can deal with the loser easily, but it gives me the opportunity to consider what I did right and what I did wrong, to consider what to fix. I'm not trained so much that 30 minutes is all that. It's just the discipline of doing it. I also take a long walk in the evenings to let my own wander through a day. Good. So it sounds like it's a healthy rule, Gam. Sounds like it's a healthy habit. And again, eventually you want to break through your barriers. Ideal would be that you never even need to take a walk after that your mind is just fresh and ready to restart right away. Always look to push up against your own barriers and get past them. So I got a few more minutes and then we have to wrap it up because there's another one after this, so go through the last few questions and that's it. Gabriel says, but we should try to differentiate a mistake to just a loss. Yes, in the sense, yes, I think that's a healthy habit as a whole. If you make a trade according to all your parameters, all your rules, your trading plan, you did everything according to discipline, and it just didn't work out, then that's just a loss. But when you've had a loss that was the result of mistakes, not following your trading plan, not doing certain things, you've gone off the reservation, then that's definitely something you want to spend a lot more time looking at, understanding what you did wrong, and then again mentally visualizing yourself going through the same situation, but then creating a different outcome the next time, seeing yourself not making that mistake. So that will help create a mental program so that the next time you come up to that you're more likely to no longer make that mistake. Lisa says, I tend to think that about life I should have known better or seen whatever coming. It's always easy to say I should have known better or seen what was coming. It's always easy to say that. It's the same in trading, and it's important not to get caught up in that. If you're always constantly doing that, then it's telling you something. Last few questions, and we'll wrap it up. Thanks for the reminder that everything is connected and is just a projection of my own beliefs and behavior. Well, yes, things are connected, but it's not just all about your mind. This world is a lot bigger than your mind, and it's important not to think everything is all about your mind. Sometimes there are things that are going to happen completely independent of what your mind wants, thinks, or cares about. But it is important to understand how important your projections, your beliefs, your behaviors can and will influence your trading. I think that's probably why most people fail, is because it's the one area that in risk management are the areas of trading they tend to overlook the most, the areas they tend to work on the least. And of course, it's natural that people are going to work the least on risk management and their own trading psychology. Risk management is not sexy generally. It's not fun. It's rather boring and dry. But it will make all the difference in your world and your trading. The second thing is trading psychology. Trading psychology is like holding a mirror up to your face, except you've just woken up, you have bad breath, your hair looks messy, skin looks terrible. After a night of drinking, sometimes when you really look at yourself psychologically in terms of trading, you're going to see things that maybe aren't comfortable, that are not pretty. It's the least glorious aspect of it, and it's the most uncomfortable aspect of trading. So it's important that people do that, but I also understand why people avoid it the most, because it's the least uncomfortable, or it's the least comfortable thing for them to relate to. All right, last two things, and that's it. Michael says, when do you think this market is going to calm down again? At the moment, it seems you have to be super vigilant. It's a good question. I try not to think about it when it's going to happen. It's more of like just sit back and wait for your opportunity. When the good trades come, those good opportunities, take them, and when they're not there, don't. Play it, as simple as that. All right, great. Well, I have to get going. So with that being said, I want to say first off, thank you all for this class. Thanks to FX3 for the recording of this. It will be made available later on, so hopefully you guys will get to review it again and again. And I hope you guys enjoyed this class. It's completely different from the traditional classes that we do. We normally go over, trades that I used on a price action perspective that were successful, the process I went through, all the price action tools I used, entry, exit, stop, and all that. This was a little bit different. And so I hope you found benefit in this. I hope you enjoyed this. And other than that, we'll be resuming our normal classes next week at same bat time, same bat channel. So until then, I bid you all adieu. I wish you good luck trading. Any questions? Make sure to check us out, secondskiesforex.com. And any questions that you want to talk to me about personally, email me, info@secondskies.com. Until then, good luck trading. I'll see you guys next week. Take care, everyone.